Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. Right now, the market is largely playing out according to structural logic. Fibonacci levels and indicator confluence are being respected. First, price found support around 87,000 and then staged a rebound. After bouncing toward the 90,000 area, momentum clearly began to stall. Second, on the 4-hour chart, once the 0.618 support held, the natural rebound targets became the 0.5 and 0.382 retracement zones. At the moment, price is actively testing these areas. The key signal here is that this rebound is not just an emotional spike. It's transitioning from an oversold bounce into a short-term structural recovery. However, this is also the zone where bulls are most likely to get trapped, a classic pressure band where false breakouts and bull traps often occur. So next, we need to separate strength from weakness. Let's start with the 4-hour chart. Price is currently stalling around 90,000. In essence, it's capped below the 0.236 resistance level, around 91,300. This level is extremely important. More importantly, look at the indicator structure. The mesh seed is about to form a golden cross, and the bearish histogram is shrinking. That means downside momentum is fading. The bear's marginal selling pressure is weakening, suggesting that short-term buying interest is flowing back into the market. The structure is shifting from one-sided selling pressure into a rebound phase with the potential for continued consolidation and gradual lift. At the same time, RSI has turned upward from oversold territory. This is a classic oversold recovery signal combined with improving risk appetite. In other words, on the 4-hour time frame, this is not just a weak bounce inside a pure downtrend. It looks more like a rebound structure in the process of forming. That's why price was able to rally from around 88,000 to near 90,000 and is now consolidating here to digest overhead supply. Now let's move to the daily time frame. The key question here is whether this rebound is merely short-term repair or if it can evolve into a meaningful structural reversal. On the daily chart, MACD is also close to forming a golden cross, and the bearish histogram is contracting. RSI has turned upward from oversold levels as well. This tells us that not only the short-term cycle, but also the higher timeframe cycle is undergoing synchronized momentum repair. When both the 4-hour and daily charts show simultaneous momentum exhaustion and turning points, the market typically follows one of two paths. The stronger scenario: if pullbacks hold without breaking support, price quickly regains strength and pushes higher to test major resistance zones. The weaker scenario: price consolidates below key resistance, then suddenly sells off again to retest support, and only afterward decides whether a second upward attempt is possible. Right now, we see price stalling around 90,000. This is not contradictory. It could be bulls accumulating and rotating positions for another push, or it could be large players preparing a distribution move at resistance. So the core judgment comes down to two things. Does the golden cross fully materialize? And can price firmly reclaim and hold above key resistance? If the rebound is to continue, the next critical level on the 4-hour chart is the 0.236 retracement near 93,900. This level is important not just because of Fibonacci, it also aligns with prior swing highs that failed multiple times. That creates a confluence zone of supply, trapped longs, and overhead selling pressure. When price reaches such a zone, two reactions are typical. 1. Price pushes higher but gets rejected. Long upper wicks form. Volume fails to expand, and bulls get sold into. That often leads to a rejection and pullback. 2. Price breaks through with strong volume and then successfully retests the level without losing it. That would indicate supply has been absorbed, and the market transitions from rebound repair into structural recovery. Only then would it qualify to extend toward higher resistance zones. So the 0.236 level around 93,900 on the 4-hour chart is not an automatic shorting level. It's a strength testing checkpoint. If price fails to reclaim and hold above 0.236, it's likely to fall back and retest lower support. If price breaks above and holds on a pullback, that signals structural improvement and opens further upside room. To summarize the trading logic, support around 88,000 has proven effective. The 90,000 area is currently a pressure digestion phase. Both the 4-hour and 12-hour charts are showing signs of bearish momentum exhaustion and potential turning points, suggesting the rebound still has continuation probability. However, both 90,000 and especially 93,900 are clear supply and resistance zones. The most likely near-term scenario is choppy consolidation and potential false breakouts, a classic shakeout rhythm from a strategy perspective. The bullish approach is to wait for the golden cross confirmation, then look for pullback support and breakout stability. The bearish approach is to watch for failure patterns near 93,900, especially momentum divergence signals. In simple terms, this is not about guessing direction. It's about waiting for the market to reveal its strength around the two key gates, 90,000 and 93,900. That's today's analysis on Bitcoin. See you tomorrow.